Welcome to the audio press release, APR, powered by IBN. This original production delivers market and sector insights, as well as executive interviews with innovative executives shaping the future in fast-moving industries, and may feature a client partner of IBN or one of the 75-plus investor-focused brands within IBN's dynamic brand portfolio. As multifaceted financial news and publishing company, IBN leverages its extensive distribution network, utilizing multiple proprietary corporate communication tools to introduce both public and private companies to a vast and diverse audience of investors, consumers, influencers, journalists, and other targeted segments of the public. IBN may have received compensation to produce this audio content. Please be sure to read IBN's entire disclaimers for full disclosures. Network Newswire presents From Permits to Pouring Gold, the Power of Being Production Ready. This article has been disseminated on behalf of LaFleur Minerals Inc. and may include a paid advertisement. The most powerful moment to get involved in a mining company's story is often not at the earliest discovery stage or even after production is fully established, but at the precise inflection point when a company transitions from explorer to producer. This is the stage where geological risks have been substantially reduced, infrastructure decisions have been made, and capital is finally aligned with execution, creating the conditions for outsized valuation re-ratings. Solid funding is essential at this juncture, as it allows management teams to shift from conceptual planning to tangible value creation. The scenario is now taking shape at LaFleur Minerals Inc., LFLR on Canadian Securities Exchange, or OTCQB, ticker symbol LFLRF, a Quebec-based gold company that recently completed an oversubscribed and upsized $7.8 million financing and is now funded to restart production at its Beacon Gold Mill, positioning the company at exactly the point where upside potential historically accelerates. LaFleur stands out in a crowded junior mining landscape because it controls a rare combination of advanced exploration assets and fully permitted refurbished production infrastructure in one of the world's most prolific gold regions. The company owns the Beacon Gold Mill outright, a modern facility in excellent condition that has already undergone substantial upgrades, while also advancing its wholly owned Swanson Gold Project as a near-term source of mineralized material. Despite being years ahead of many regional peers that are still navigating permitting and infrastructure hurdles, LaFleur continues to trade at a discount to underlying value of its assets, creating what appears to be compelling disconnect between market valuation and operational readiness. LaFleur is at a strategic inflection point as it transitions to near-term revenue generation in Canada's largest gold-producing region. The company sits among a strong group of gold-focused mining companies dedicated to being leaders, including Barrick Mining Corporation, Cartier Resources Incorporated, Seabridge Gold Incorporated, and Probe Gold Incorporated. Disclosure: this does not represent material news, partnerships, or investment advice. LaFleur's near-term strategy is built around a simple but powerful concept, feeding its fully permitted Beacon Gold Mill with mineralized material from its own Swanson Gold Project. The Swanson Gold Project represents LaFleur's flagship exploration and development asset and forms the geological backbone of its vertically integrated production model. As LaFleur moves closer to production, the company is taking deliberate steps to de-risk its development pathway through bulk sampling and advanced economic analysis. The Beacon Gold Mill is central to LaFleur's investment thesis and is arguably the most distinctive asset, sitting at a replacement valuation nearly twice the company's current market cap. LaFleur's restart plan for the Beacon Gold Mill is both defined and achievable, with trial runs of processing on-site stockpiled material targeted for Q1 2026. Funding the leap to production. The past few months, gold prices have surged to record highs, with spot gold climbing above $4,600 per ounce and major financial institutions and analysts projecting further gains throughout this year. Analysts have forecast that gold could trade above $5,000 per ounce in 2026, driven by continued macroeconomic uncertainty, central bank buying, and safe haven demand, while 2025 saw one of the strongest gold rallies in years. As gold prices hit these historic levels and forward guidance remains bullish, producing gold mining companies, particularly those near or in production such as LaFleur, stand to benefit from expanded margins and stronger cash flows. LaFleur's near-term strategy is built around a simple but powerful concept, feeding its fully permitted Beacon Gold Mill with mineralized material from its own Swanson Gold Project to create a vertically integrated, low-cost production model. This approach eliminates many of the uncertainties that plague junior miners, including reliance on third-party processing facilities and delays caused by permitting new infrastructure. By controlling both the source of ore and the processing facility, LaFleur is positioned to capture value across the production chain in one of the most established gold districts globally. The company recently completed a $7.8 million Canadian dollar financing that marks a strategic inflection point as it transitions from exploration toward near-term gold production and sustained value creation. This financing included the previously announced closing of an upsized life offering with gross proceeds of approximately $4.7 million Canadian dollars. An oversubscribed flow-through offering generating about $2.2 million Canadian dollars and a final hard dollar tranche of roughly 900,000 Canadian dollars. Collectively, these transactions provide the financial momentum required to advance both mining restart activities and continued development of the Swanson Gold Project without immediate dilution pressure. This funding milestone arrives as LaFleur prepares to complete its preliminary economic assessment, or PEA, which is intended to outline a comprehensive and economically grounded plan for sourcing mineralized material from Swanson and processing that material at the nearby Beacon Gold Mill. The PEA is expected to incorporate updated geological data, mining scenarios, metallurgical performance, and cost assumptions, providing investors with a clear picture of project economics, benefiting from current gold prices. Importantly, the PEA is not an abstract study, but one anchored in existing permitted infrastructure, significantly reducing execution risk compared with greenfield development models. LaFleur's timing aligns with broader structural trends in Canadian gold mining. Canada maintained its position as a top global gold producer in 2024, posting a year-over-year increase in output, with Ontario and Quebec remaining at the heart of production. The Abitibi Greenstone Belt in particular continues to attract capital, consolidation, and major acquisitions. Recent regional transactions involving established producers underscore the strategic value of advanced projects with infrastructure, while rising gold prices add further leverage to near-term producers. And against this backdrop, research coverage has highlighted LaFleur as a potential beneficiary of a near-term re-rating as it moves decisively toward production. Swanson Project anchors growth strategy. The Swanson Gold Project represents LaFleur's flagship exploration and development asset and forms the geological backbone of its integrated production strategy. The project is at an advanced exploration stage, supported by more than 36,000 meters of historical drilling that have delineated multiple gold-bearing structures across the property. Current mineral resource estimates stand at approximately 123,000 ounces of gold in the indicated category and 64,500 ounces inferred, providing a meaningful foundation of near-term development while leaving substantial room for expansion and a potential to reach a 1 million ounce gold resource. Swanson's land position has expanded significantly in recent years and now encompasses more than 18,300 hectares, including hundreds of claims and a mining lease, one of the single largest land packages in its district, within proximity to historic and operating gold mines in the Abitibi region. The scale gives LaFleur the opportunity to pursue a district-level exploration strategy rather than a single deposit narrative. Management has articulated a clear intention to consolidate surrounding land packages, strengthening Swanson's position as a dominant exploration place supported by nearby processing infrastructure. Exploration efforts at Swanson are active and systematic. LaFleur initiated a 7,500-meter diamond drilling program targeting more than 50 prospective zones across Swanson and satellite areas such as Bartek, Jolene, and Merrimack. The program is designed to test high-grade zones, evaluate extensions along strike, and assess open-pit potential in areas amenable to bulk sampling. Recent surface sampling has returned, encouraging gold grades, reinforcing the geological thesis that Swanson could support both near-term production and long-term resource growth. In parallel, the company is advancing a focused twin-hole drilling program at the main Swanson deposit to validate historical results, improve resource confidence, and collect fresh core for metallurgical and ore sorting tests. These efforts are directly tied to the upcoming PEA led by ERM, intended to support a long-term goal of expanding the resource base toward the million-ounce scale. Crucially, the proximity of Swanson to the Beacon Gold Mill allows LaFleur to envision trucking ore for processing, a model that has proven successful throughout the Abitibi and one that investors tend to have due to lower capital intensity and faster timeliness. De-risking economics through bulk sampling. As LaFleur moves closer to production, the company is taking deliberate steps to de-risk its development pathway through bulk sampling and advanced economic analysis. The permitting process is underway for a bulk sample of approximately 100,000 tons from the Swanson Gold Project, with an estimated average grade of around 1.9 grams per ton gold. The sample would represent a small fraction of the current resource, but would provide valuable real-world data on mining, processing, and recoveries. Bulk sampling serves multiple strategic purposes. It allows the company to validate grade continuity, test mining assumptions, and generate metallurgical data under operating conditions that closely resemble future production. It also provides an opportunity to produce gold doré early in the development cycle, which can be used to offset costs and demonstrate operational capability. Environmental and closure plans associated with the bulk sample are being finalized in collaboration with Quebec regulators, reflecting the province's well-defined and transparent permitting framework. The anticipated release of the PEA in early 2026 is likely to represent another catalyst in LaFleur's transition from explorer to producer. Investors often review this stage as a validation checkpoint and often a re-rating signal, where theoretical upside is translated into modeled economics supported by infrastructure and funding. For a company already holding a permitted mill, the PEA's conclusions may carry additional weight, as fewer assumptions are required to bridge the gap between study and execution. Beacon Mill provides immediate leverage. The Beacon Gold Mill is central to LaFleur's investment thesis and is arguably the most distinctive asset. Located in Val-d'Or, Quebec, the mill is fully permitted and capable of processing more than 750 tons per day, with expansion potential. It was acquired out of the Monarch Mining CCAA process in 2024 and had already benefited from approximately 20 million Canadian dollars in upgrades, completed as recently as 2022. As a result, the facility is in excellent operating condition and requires relatively modest capital to restart. Independent engineering analysis has underscored the value of this infrastructure. A valuation report prepared by Bumijim Incorporated assessed this replacement cost of the Beacon Gold Mill and its tailings facility at approximately 71.5 million Canadian dollars, highlighting significant barrier to entry such assets represent today. In contrast, the estimated cost to rehabilitate and restart the mill is in the range of 5 to 6 million Canadian dollars, a fraction of the cost required to permit and construct a new facility from scratch. The mill is royalty-free, carries no material encumbrances, and is supported by reclamation bond, further enhancing its strategic appeal. Its location benefits from existing road access, grid power, and a skilled regional workforce, all of which contribute to lower operating risk and faster ramp-up timelines. In addition to processing ore from Swanson, the mill offers the potential for custom milling arrangements with other deposits, many of which are nearby, creating optionality for additional revenue streams. From financing perspective, the Beacon Mill significantly strengthens LaFleur's negotiating position. Infrastructure of this quality and permitting status is increasingly rare, particularly in Tier 1 jurisdictions. The mill's presence supports both equity and offtake financing discussions and underpins the economic assumptions being incorporated into the company's development studies. For investors, it represents tangible, hard asset value that is often underappreciated in early-stage mining valuations and a barrier to entry for aspiring gold producers transitioning from exploration. A near-term path to cash flow. LaFleur's restart plan for the Beacon Gold Mill is both defined and achievable. The company has outlined a budget of approximately 5 to 6 million Canadian dollars to bring the mill back into operation over a 6 to 8 month period. This plan includes targeted upgrades to mill equipment and necessary work on the tailings storage facility, ensuring compliance and operational readiness. The objective is to begin ramp-up early this year, achieving steady-state operations within a few months. This timeline places LaFleur among a small subset of junior companies with a credible path to near-term cash flow. In an industry where average mine lead time can exceed 15 years from discovery to production, the ability to move quickly from development to operations is a powerful differentiator. Investors consistently gravitate toward brownfield opportunities with proven geology and existing infrastructure, particularly when commodity prices are supportive. Regional dynamics further enhance LaFleur's positioning. The Abitibi Belt is surrounded by more than 100 historical and operating mines, many of which could represent future sources of custom milling feed. Recent mergers and acquisitions involving major producers in the region have validated the strategic importance of established infrastructure corridors. Valuation benchmarks emerging from these transactions suggest that ounces in the ground, when paired with production pathways, can command meaningful premiums. LaFleur's proactive steps to explore financing options and partners were initiatives that built the momentum of recently closed financings, where the capital of production restart not only secures the company moving forward, but provides optionality as the company advances toward cash-generating operations. In an environment where gold prices could continue to rise, potentially reaching levels well above historical norms as global debt expands, the leverage inherent in near-term production stories becomes increasingly compelling. Ultimately, LaFleur exemplifies why the explorer-to-producer transaction is often considered the most attractive phase in the mining life cycle. With funding in place, a permitted and refurbished mill, and an advanced exploration asset poised to supply feedstock, the company appears positioned several years ahead of many of its peers. As gold prices remain elevated and investor appetite for de-risked growth stories increases, LaFleur's integrated model in the Abitibi Belt underscores the kind of timing and asset alignment that can drive significant re-ratings in the junior mining sector. This key timing and alignment is outlined in a recent report by Zacks Small Cap Research, which outlined a valuation share price of $1.04. The audio press release, APR, is an original content production powered by IBN, a multifaceted financial news and publishing company that delivers next-generation corporate communication solutions. Utilizing proprietary corporate communication tools such as news aggregation and syndication, social communication, and brand awareness techniques, among others, IBN introduces both public and private companies to diverse audiences to enhance reach and recognition. IBN may receive compensation for services and solutions provided to its client partners. The owners, officers, and directors of IBN or financial analysts mentioned in this production do not hold any position in and do not intend to trade the securities in their own accounts. This production is not an offer or recommendation to buy or sell any securities that may be mentioned in this production. The information in this broadcast is presented solely for informative purposes and is not intended to be or should it be construed as investment advice. As in all investments, investment in the featured companies carries inherent investment risk. Listeners should review the company thoroughly with a registered investment advisor or registered stockbroker. This production by IBN is not purported to be a complete study of the featured company or other companies mentioned. Information used in statements of fact have been obtained from featured companies and other sources, but not verified nor guaranteed by IBN as to completeness and accuracy. Such information is subject to change without notice. Please read IBN's entire disclaimers and disclosures at www.ibn.fm/disclaimer. Thank you again for listening to the audio press release APR powered by IBN.